So in today's edition of Talk My Book, I wanted to walk through a typical swing type scenario. And this morning when the US dollar put in that 80.03 low, it put a ceiling on the Euro US dollar and started sending prices lower. So once that happened, I started looking for swing trades. So number one, the criteria for a swing trade is I've got to have a trending market. So on the 15, the 30, and the 60-minute charts, my primary indicator, which is this 34 period exponential trio of moving averages, I've got a 34 period on the high, 34 period on the close, and a 34 period on the low. So those all were heading down lower, so I look at this as a markdown cycle. It's pure Charles Dow theory, market trends type stuff. I'm looking at market cycles and I'm trying to let the market direction dictate what my entry strategy should be. So when I've got a trending market, I'm looking for corrections or what some people call swings in the market so I can capitalize on that correction. In this case, I'd be shorting into the near-term strength. So what I was looking at and what I ended up focusing in on was the 30-minute chart. Let me blow this up here. And essentially this is the setup. So I've got a downtrend. I'm waiting for a correction to one of two places. I don't know how many of you out there are big Fibonacci fans. If you already didn't notice, the Fibonacci number that I'm using, 34, is the setting for my moving averages. And so what I do is I pull a Fibonacci level. So there's my high and low real roughly there. And I'm looking for either a pullback to the bottom line of the wave, or I'm looking for a pullback to the 38.2, whatever the situation is. Now some of you might pull the Fibonacci from up here. You know, Fibonacci is far from an objective tool. You know, the highs and lows that we all might determine is the criteria for the last major move can all be very different, which is kind of the bane and blessing of Fibonacci. I mean, there's probably 3 different highs here that we could have pulled down to this low to make the Fibonacci. Now, I realize that in itself would probably rule out a lot of people using Fibonacci as a determination as to what the swing or the correction would be. I think a far more objective tool would be the 34 EMA low here, which is what I use a majority of the time. You can see we hit it here. We're hitting it again right now. The difference being back here, this was 11 a.m. and I don't mind taking new entries between basically 7 and 11, or basically any time that London's open. Once London's closed, I'm not so keen. So this would not be necessarily an entry. This was the initial short entry, and that's the ride that I took down to about that 35 near-term support. So I just wanted to give you a little transparency on the short, and if it happens again in Asia, when we bounce up into the 34 EMA, I'll do it again.